Welcome to TradeTheNBI.com. This is John's reports for the 20th, right before winter begins. And well, you can see it from here, the daily ES. Not exactly what some people were hoping for from a holiday situation, but of course, you got a major dynamic going on. The government potentially shutting down today, and we'll see how that works out. But they held the line. For the first time, there may be significant blocks to excess spending, and that is definitely not what the market wants to hear, because most of that largesse goes to them, and yeah, it can have an impact overall on the bottom line, and it's a change in focus. So we'll see. It just means there's going to be a lot of contention, a lot of battles, and probably a lot of stalemates going forward. Normally that's good for a market, but in this particular case, as you've seen such a shift where most of the benefit from government spending has been going to corporations. I'm not going to be happy with this one, because as we were talking about, that dynamic's going to change. The same thing will happen with tariffs and situations like that. Well, it seems like it may be beneficial to certain sectors, and that's not necessarily how it's going to play out. From an NQ standpoint, you can see we filled the positive extreme. So perfect, nothing out of the ordinary. Didn't sell configuration, not that strong a short interest move from here. What we do see, though, is the start of short-term buyers coming alive. They're seeing this dip as a perfect opportunity to jump in, having avoided the big run up there. Now you get reasonable pricing. Are we at that turnaround point? I don't think so yet, because obviously you still have magenta fading here. So until that actually starts to turn around, I would be waiting, because that is not a buy configuration yet. Of course, we'll see turnarounds intraday in that, but treasuries, look at that. The market is going to be demanding what the Fed is not doing, and they're going to insist upon higher yields for what they're getting. And that's an interesting one, because that's going to draw some attention from the market, because you get yields significant enough with modest inflation. Yeah, people are going to go to bonds over stocks in a heartbeat. That will be a major liquidity drain to the market. We've already seen pretty low breadth over these last several weeks and stuff. So is that going to compound things? Absolutely it is. So it's all good stuff. It's going to make a lot more volatility. I think this idea that people thought that the one-way Trump trade, I was saying from the beginning, it's not going to be that way. It's going to be a lot of up and down within it. Now, do I still think the broader bias will be to the upside? No, no, I don't. But that's okay. We'll let the charts then play it out. But at the end of the day, I mean, really a lot's going to determine how things move. Not next year, maybe the year after, when it comes to energy, and whether or not that's been satisfied to the point where it propels the economy going forward. That's really what the marker to look forward to. There's a lot of stuff that's got to happen in the interim in between. Interesting now here in Europe, you're getting a lot of talk about wanting to repatriate all the Syrians. Okay, we didn't even discuss the increase in the global conflicts. It looks like the Biden administration is doing everything they can to end the year with as much turmoil as possible, whether it be letting Ukraine use U.S. missiles in deep in Russia, the troop increases in Syria that the Pentagon now admits that they just kind of were deceptive about. What a shock there. So a lot more U.S. troops. So is that going to become another ingrained situation? I mean, there are a lot of these landmines, pitfalls that are being set up. But from a Eurozone standpoint, yeah, retouching the bottom is going to break to new lows. So it's just a matter of when can the central governments hold it in place. There's going to be some panic in Brussels about this, but at the end of the day, the economics don't lie. You can cover them up, you can massage them as much as you want, but at a certain point, it just gets too overwhelming, and reality becomes rather apparent. I think that was sort of, clear with Biden. You could see things were deteriorating for him, but of course they were like, no, the emperor has lots of new clothes, and yeah. From a gold standpoint, you're gonna. It's an interesting one because I think this depression in gold is a little bit overdrawn. The reality is that gold still has more room to go. You're not going to be necessarily talking all about inflation, but it's also going to be about instability, and I think that's going to have a big play going forward. And you're going to see the same thing as far as that relates to crypto as well, because that's going to be a safe haven for people to be outside the fray, so to speak. Not that there isn't going to be an impact. Of course, you can see, look at these moves with ETH and that. Some would call it dramatic. I don't see it that way because I think that what was dramatic was the exuberance that took place. We could see it with the positive extremes, and we talked about it. It's like, okay, you're still going to have the retraces. And people were like, oh, I got quite a few of them. You're crazy. Bitcoin's just going to go nonstop. And I'm like, I've heard this story before so many times. Please, just, okay, you're right. No, you're not. Uh, the charge doesn't lie. The positive extremes get filled. It's what happens. So yeah, deal with it. There was the 50K. So the best they could do is they get to the 38%. That was actually pretty healthy, but under major spike white MBI, as soon as that crossed below, uh, was calling for the zero. They actually held up pretty decent right here for a brief moment, tried it again, and then the white spiked again right at the 23% before the move all the way to the zero. No shock, no surprise. Exactly what we would expect, and a little bit longer than maybe was expected, but reaching the same conclusion. It's just sometimes you have to wait for it. They do a little shimmy back and forth, a little shake, rattle, and roll. From an intraday, though, yeah, it was there were still some modest bumps, and that's going to be the case here in the European session. Feeling very depressed about this whole situation, so they're pretty much selling it at this particular stage. No one wants to get caught with their pants down, so to speak. So, but it's going to happen. They're going to continue to misplay these things because they just don't understand the fundamentals of how real economies work because they've been so laxed with this fake economy stuff that we've been dealing with for the last, well, better part of a half decade. And it makes things difficult when you try and readjust. It's the same thing happened after the 2008 collapse, where you had the Fed pretty much orchestrating a market for almost a decade there. So crazy. As always, though, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.